Real estate and NFTs, two very different investment worlds, but both have attracted massive attention in recent years. Whether you're looking to invest in physical assets or digital ownership, let's break down the pros and cons of each. Real estate investment. First, let's talk about real estate. It's one of the oldest forms of investment, tangible, stable, and often seen as a safe bet. Pros of real estate. Tangible asset. Generates passive income. Long-term appreciation. Leverage. And tax benefits. NFT investment. On the other side, we have NFTs, digital assets representing ownership of unique items like art, music, or virtual land. They're powered by blockchain technology, which verifies authenticity and ownership. Pros. NFTs. High growth potential. Unique ownership. Easy to buy and sell. Early entry into emerging markets. Real estate. Real estate offers a physical asset you can touch, rent, or sell. It generates passive income through rental properties, and, historically, real estate appreciates in value over time. Additionally, you can leverage mortgages to grow your portfolio and enjoy tax benefits. However, there are downsides too. Real estate requires substantial upfront capital, ongoing maintenance, and can be subject to market fluctuations. Plus, properties aren't liquid assets. It can take time to sell. Cons of real estate. High initial capital. Market dependent. Maintenance costs. Less liquidity. NFTs. NFTs have exploded in popularity, with some assets appreciating in value by thousands of %. They're easy to buy, sell, and trade, and allow you to enter early into growing markets like digital art, gaming, or virtual real estate. But there's significant risk involved too. The NFT market is still highly speculative, with extreme volatility. Assets could lose value quickly, and the market's regulation is still uncertain. Cons of NFTs. High volatility. Speculative market. Lack of regulation. Risk of digital theft or loss. Key considerations. So which is better for you, real estate or NFTs? The answer depends on your risk tolerance, financial goals, and market knowledge. If you're looking for long-term stability, tangible assets, and passive income, real estate might be the right choice. But if you're interested in high-risk, high-reward opportunities and understand digital markets, NFTs could offer significant returns. Remember, every investment comes with its risks and rewards. Whether you choose real estate, NFTs, or even a mix of both, always do your research and invest wisely. Which will you choose? Real estate or NFTs? The decision is yours.